Okay, happy Monday, everybody. All right, so what I thought I would address this morning is the price of gold. Last week we saw the price go up quite a bit. It was kind of a nice thing to watch. But then on Friday we saw it jump quite a bit up to $2,070 an ounce, just above that. That's not something we were necessarily expecting. So then what Greg and I try to do is, we see these price moves, whether they're going up or down, and we try to anticipate where the actions are coming from and what's causing them. So here's our take on this. The Federal Reserve met. Jerome Powell, the chairman of the Federal Reserve, made an announcement that they said that he's giving a hawkish position, which means that he's being tough against inflation and therefore is not planning on lowering interest rates. That every time he's done that in the past, they either raise interest rates or keep them higher, and when they make an announcement, the price of gold drops. Then it slowly comes back up and typically comes up to new highs. And then the Fed says the same thing. We're keeping the rates the same or higher, and then the price of gold drops, and then it goes back up. This time, he said that we're keeping the rates the same, and instead of gold dropping, gold actually shot up quite a bit. Why would that happen? Well, in the former case, when the U.S. Treasury is saying we're going to increase rates, what that's saying is that treasuries are now paying interest. Well, gold doesn't pay interest, so it kind of takes the fun out of gold, which pulls down the price. When this opposite happened, I think it's because the market's not believing Jerome Powell. They don't believe him that they're going to keep rates high to crush inflation because it's having a major impact on the economy. Now, the Fed has also said they're expecting a soft landing. Now, a soft landing, I picture like a pigeon with sore feet, like trying to, gently land on a hot sidewalk or something. But it doesn't look like that's going to happen. Not at these current rates. We're already seeing massive impacts in real estate nationwide in terms of the volume of houses that are selling. We're seeing it with car sales. We're seeing it with the electric vehicles. They're not selling the way Washington had intended. We're seeing Walmart just made an announcement that these high rates are having a huge impact. Then we've got the United States debt, right? We reviewed last week that interest payments are now greater than the military budget. So if they keep interest rates this high, they're going to pull down inflation, but they're going to cause a massive recession. And they've said they don't want a massive recession. So now the Fed has a choice to make. The Fed's saying we're going to keep rates high, but the market doesn't believe it based on other things that the Fed has said. So now they're thinking they're going to lower rates. But what happens if they lower rates? Inflation will jump back up. So that's where the price of gold is shooting up in expectation of that. So fascinating. Now, do we expect this to just keep going like this right now? No, we don't. I think there's going to be a pullback. I think there's going to be some institutional investors that capture some gains and sell, and then the price will come down. So what we like to see is this in anything we own, right? But the general trend continues to go up. Now, with gold, I think there's no other direction but up over the long term, especially considering its value as real money compared to the paper stuff that's being printed right now. But we'll see it go like this over the long term. But in the small term, when you zoom in, we're probably going to see some ups and downs. Anyway, found it interesting, thought you would too, and this is a little glimpse into how we analyze things here at Zaneti Financial. All right, you all have a great week, and we'll see you next Monday. Take care. Bye-bye.